Hi, in this video I would like to show you an indicator called average true range indicator. So average true range indicator is a volatility indicator. When the average true range indicator is showing lower readings for any currency pair, that means there is a lower volatility for that currency pair. When the average true range indicator is rising, that means the volatility of the current currency pair is increasing and you can see large bars for that currency pair. When the ATR indicator started decreasing after reaching a higher point, the volatility of the currency pair is decreasing. You can see in this picture, see this is the average true range indicator. So this indicator shows the volatility of the currency pair. So if you see this one at this point it started increasing after reaching some lowest point. So you can see some high some large bars in the price. There are some large price bars here at this point, and after this point it started decreasing. It reached some highest point and it started decreasing from this point, and you can see small bars at this point. So this is how this indicator works. When the ATR indicator is increasing after reaching a lowest point, that means the volatility is increasing and you can see some large bars. And when the ATR is decreasing after reaching some highest point, you can say that the volatility is decreasing and you can see some small bars on the price chart. ATR indicator doesn't say anything about the trend. It only says about the volatility of the currency pair. If you see this one, the ATR is increasing after reaching a lowest point, but the trend can be either bullish or bearish, and so it doesn't say anything about the trend. It says only about the volatility of the currency pair. So how to trade using ATR indicator? This is one of the method. There are many ways. You can trade forex using ATR. Many traders use ATR with ADX indicator and ATR with parabolic SCR indicator and all those things. But you can use this indicator alone for scalping purposes. So how to use the ATR indicator for scalping purposes? Observe the previous trend on the when the ATR indicator is rising on 1 hour chart. So take a 1 hour chart and put an ATR indicator on it for the 1 hour chart for any currency pair, and observe the previous trend when the ATR indicator is rising. When the ATR indicator is falling, switch to 5 minutes chart. That means you have to switch to 5 minutes chart when the ATR indicator is falling. And on the 5 minutes chart, put a stochastic oscillator with default settings and put levels 30 and 70. So put a stochastic oscillator on the 5 minutes chart. Whenever you switch, whenever the ATR indicator is falling, switch to 5 minutes chart and put a stochastic oscillator on the 5 minutes chart with the default settings and levels 30 and 70. Okay, now if the previous trend is downwards in the 5 minutes chart, you have to enter long trades. That means you have to go for buy. In the 5 minutes chart, wait for the price to reach the oversold region and enter long trade. That means observe the stochastic oscillator, and whenever the price reaches the oversold region which is below 30, and enter a long trade whenever the stochastic oscillator the two lines of the stochastic oscillator, the slow moving line and the fast moving line, crosses each other below the 30 level, enter a long trade. Aim for 5 to 10 pips and exit the trade. Similarly, if the previous trend is upwards, then in the 5 minutes chart, enter short trades. In the 5 minutes chart, wait for the price to reach the overbought region and enter a long sorry, it's not a long trade, but it's a short trade. Enter a short trade. That means if when the ATR indicator is rising and if the trend is upwards, and whenever the ATR indicator is falling, switch to 5 minutes chart and observe the stochastic oscillator. When the stochastic, when the price reaches the overbought region, that means the fast moving and slow moving lines are above 70, and whenever they cross each other, enter a short trade. It's not a long trade here. Enter a short trade, aim for 5 to 10 pips and exit the trade. So this is the chart here. See, the ATR indicator is rising here and then falling here. If you see this one, when the ATR indicator, when it is rising, the trend is downwards. So when the ATR is indicator is falling, you have to aim for, you have to enter buy trades. That means long trades. So when the indicator is falling, switch to 5 minutes chart and put a stochastic oscillator on that, and whenever the price reaches the oversold region, enter long trades. So here at this point the price reached the oversold region. So whenever the fast moving and slow moving averages of the stochastic oscillator crosses each other, then you can enter for long trades and you can aim for 5 to 10 pips and exit the trade. So this is one of the ways you can use the ATR indicator for scalping purposes. Thank you.